The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 4th terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have a terrific Thursday. Let's always remember what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. But what's scheduled, folks, that is reality. That becomes real. Thank you for scheduling your time with me this morning. I'm grateful for your presence here, and I'm here to serve you. So give me a call at 877-927-6648, or internationally you can reach out to us at 727-445-1044. Remember, if you've got a question, then someone else has that exact same question. So don't call in for me. Don't call in for yourself, but instead call in to help someone else, because that's the way to live, folks. Random acts of kindness. This is Terrific Thursday. This is TFNN. I'm Steve Rhodes, and welcome to the show right now. Dow is off 48 points. She's trading out at 17,864. S&P slightly off. She's down 3 points, trading at 2,071. Composite to the upside, up $6, trading at 47.80. Russell off about $3, trading at 11.76. The DAX down 100 points. The FTSE's off 26. They don't like what Mario Draghi says. We'll go take a look at those stock charts here. The gold is off $2. That's with the King Dollar being back 378 ticks right now, trading out at 88.60. So, well, gold is I'll show you an interesting pattern inside of gold. In fact, I'll do that right now. Let's do that right now. What are we waiting for out here? Let's take a look at the gold contract. Let me do this. I'm going to change this screen here. Normally if you're watching me on Tiger TV, you're watching me at all, you know what I use is candlestick charts out there. They're beautiful because it's the bulls and bears going to work and they're painting signs for us. They really provide us with so much messaging out here. But from time to time, I will show you a different type of a chart here. Let's go take a look at the bar chart. What you're used to seeing with Tom during his shows. I'm adjusting the colors out here. There we go. So now we've got the bar charts out here. Let me get rid of the retracements. Just the retracement, get rid of that. Okay, great. Here's what's so interesting about gold. Now, if you're not familiar with using bar charting, the little dash, if you will, on the left-hand side, that's the open. The dash on the right-hand side of a bar, that's your close out there. I'm focused in on the closes out here. This is what's really interesting. Let me use my little box tool inside of this great e-signal software out here. And I'm just going to start really kind of like right here to about right there right now. Now, this is kind of a very interesting pattern. You want to talk about somebody having their thumb, group of traders, buyers and sellers, right? You want to take a look at a group of traders somehow with their thumb on the containing price within a small range out here. If we take a look at each of the closes, now this price range, by the way, $11.82 to $12.01. So you got about a $12 price range out there. On an $1,100 instrument, that's 1%. So, it's a small. Take a look at the closes out here. All the closes from the trading session here of November 14th, all within inside this box. Not all. We saw a break of that box out here on November 28th, and then there was the reaction on December 1st. And where did price come back to on Tuesday? Right back inside that box. Slightly above it yesterday, just slightly above it as we speak today. But when we take a look at the actual closes of where gold is at, really interesting to me to see this, because it's an unusual pattern out there. It's like hold, and then release. The question is, which way is this going to release out here? My suspicion is it's going to release to the upside. We'll know if it's going to release the upside when these trend lines here get taken out, when they get broken inside of gold. So it's a very interesting pattern out here. We've seen it at other times. Trust me, here's another time. If we go take a look at it, here's the hold, release kind of pattern out here. Oh, that didn't work. What tool did I grab there? There we go. a different version of the box tool, but there's that same kind of a pattern here. Now this one released to the downside. That one went on. This when I say that one, I'm kind of referring back to September 18th through the October 2nd. So a pretty good long time out there as well. So in any event, we're seeing that hold release, and the question is, which way is this going to release, to the upside or to the downside out here? I think to the upside. When gold takes out, when and if gold takes out those trend lines, then we'll know for sure. So that's just simply using, it's a little bit easier to see that, I think, with regard to the closes than versus what I've got in here right now with regard to the candlesticks, but maybe not so much out there. But that's kind of that's an interesting pattern as I take a look at what's going on inside of the market. Okay, so we got the Dow's off 54, S&P down 4 out here. Maybe we're going to get that scary bottom. Maybe we're going to get that scary sell-off that Stevie has been looking for out there. I hope we do. Because if we do, then it just meets my expectation of what I have been looking for out here, and that really becomes our next buy. If we take a look at let's see here real quickly. I was going to see, is the VIX index even moving? No, it's up 11 cents. Not even. Now, of course, the VIX is tied into the S&P 500, so the S&P 500 is only off $4 as we speak right now. And again, people call it different names. I just simply call it the liquidity gauge out there. All right, so let's go take a look at what the markets are doing here. I'm going to start off by looking at the ES Mini. I'm going to look at that 120-minute time frame. For those of you that were following us in hour one, you know that Stevie's keyed in on this price point of 2070.75. What we saw here during that 10 o'clock bar, by the way, was we saw price reject that area, get back below the lower part of that range out there. That closed out at exactly as we came into the 10 o'clock session, 2068.75. Now, during this next 2-hour session that goes till noon, we saw price get up to the high. Believe it or not, you're going to think I make this stuff up. You thought I was going to say something else, right? I don't make this stuff up. 2070.75. So at this stage, during this bar right now, we know we've seen a test of that area and a rejection. If during the 10 to 12 session that high does not get taken out, 2070.75, we see price moving lower. We're at least going to get some kind of retracement then. What kind of retracement would that be? Well, let's go. It's easier for me to use my retracement ruler by just simply coming over to this set of charts. I'll change this and put this on this is the ES Mini so that I can find it. I'll put this and change. This is the daily chart, but let me switch this over to the 120-minute time frame just to keep things here. Now, likewise, the opposite is if you see price get back above 2070.75, then what I will say to you is that price should move up to the next level. And inside the ES Mini, the next level says 2088.25. So that's what the expectation should be. Now, as we take a look at this 120-minute chart out here, we take a look at possible retracements. We're also noticing that price still traveling within the market profile box, the TAS box out here. And that's from 2073 to 2067 being the price range out here. So the ES Mini now needs to close below 2067 on a 2-hour chart out here to start to say, okay, you're going to see a retracement that I was reaching back inside my back pocket to give you the retracement off of the low here on December the 1st at about between 10 and noon to the high that came in out here yesterday at about the noon to 2 o'clock time frame out here. And if we take a look at that, you've already seen the 0.382 retracement thus far today. That price level is 2065. So a break continuing to trade below 2070.75, and then getting below 2067, that'll bring the 0.618 retracement into play. That number, 2058 and 3/4, 2058.75 cents out there would be the nut. Of course, a deeper pullback in this would take you back to the 2054 and 1/4 level. That's your 0.786 retracement area. That's what's going on inside of the ES Mini. If we go take a look at what's going on inside the Dow futures, let's go take a look at that. On a daily chart, let me widen the screen out here as best I can. Let me do this. Pull it down a bit. Okay, if we take a look at the Dow, now let's see. Yesterday's high. This is the futures contract, by the way, and I don't think we see this inside the indices. So it's really important. You don't have to trade the futures, but you sure want access to them because of the message that they can provide to you. So if we take a look at yesterday's high, 17.917. Today, 17.9 1/4. So I don't remember 7:30. 8:30, 8 o'clock this morning, we saw the Dow actually take out yesterday's high. What does that do? Well, it extends the leg G count that the Dow is in inside the futures, and I'll assume, though, inside the cash indice, I don't think it made a new high today because we opened lower. I think that might be yesterday. But we're also seeing here today is that we're seeing a key revert potential. Now, are we seeing, let's see, the low of yesterday, 17,840. The low so far, 17,836. So there you go. Now, if we take a look at this Dow chart, let me try to now squeeze it back a bit. Come up here. Okay. Try to get this into the frame. There we go. I can get it in the frame if I do this, I think, right? There we go. Okay, so now it's into the frame. So here, if we take a look at the Dow, this is a daily chart. I'm going to get rid of a couple things out here. Just makes it a little bit cleaner. Get rid of the A to B equals CD. And in fact, let me get rid of the TAS box. There we go. So now we're about as clean. I'm going to leave the moving averages out here, 8 and 13 day. First, if we take a look at coming off of the lows back here inside the Dow futures, October 15th, 16th area, we take a look at all of the candlesticks on the way up. The only real reversal signal that we have received recently was this little kind of gapish down after this doji candle, lower close, I should say, really on December the 1st out here. And then today. So now we're seeing a reversal candle. Otherwise, all the way up here, no reversal signals whatsoever inside of the Dow. So today the Dow could be, it has to just close a little bit lower inside the futures contract. We'll take a look at the actual indice out here. But here's the message. Now, where is it that price can move down to? Well, inside the daily chart, inside the Dow futures, numbers to be paying attention to are going to be 17,748. That's the 13-day exponential moving average. We haven't seen a close below that ever since it's really moved off of the bottom out here, so that would be a place. If I put the TAS box back on my screen, that gets us to 17,717, so you need to see a close below that. On the daily chart inside the TAS box out here, we can see that price right now inside of the Dow futures has just simply tested the resistance level. Old resistance becomes new support. Right now, all that we know about the Dow is that this move back here is just simply coming into a level of support, an old level of resistance. So as long as the top of that box holds, that, by the way, is 17,845. You're at 17,846 right now. Price is just coming back and testing the level of support out here. So how the Dow closes today, even if it gives you a key reversal session, I don't care whether it gives it to us today or not, you still need to see follow-through in order for any kind of change in trend to take place. That means a move lower tomorrow as well. And that's what's going on inside the daily chart. So that kind of puts things into perspective. If we change that to intraday chart, let's not do that right now. Let's just simply stay with what it is that we know and what it is that we've got out there inside of the Dow. Now let's come back and take a look at some of the indices. Let's go see what's going on inside the index ETF. Specifically, let's go take a look at the Dow Diamonds, back 48 cents as we speak right now. Hey, how about that for a strategic go into the break? So you've got to stay tuned for the next segment. Of course, you're going to be with us all day here. You've checked into Hotel California. There ain't no checking out. And that, as Tommy likes to say, is a beautiful thing. I second that motion. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 48. The S&P is down 4. Let's go to beautiful Sarasota to Don. Don, thanks for calling. Thanks for holding. How you doing this morning?
Pretty good, Steve. How about yourself?
Oh, I am doing so well. How's your holiday season going so far?
Pretty good.
That's good. Glad to hear it. Now, you're in the currency market, or maybe looking to get into the currency market, and you wanted to take a look at the Guggenheim currency for the Great British Pound, the FXB. Is that correct?
Yes.
Okay. Tell me what you're doing, how I can assist you.
Well, I expect it to go up, but it doesn't look like it's cooperating.
Okay, all right. Are you in the trade, or are you just looking to get in on it?
No, I'm in the trade.
Okay. Here's the deal with the FXB as we take a look at it, which is going to be trying to emulate the Great British Pound out here. And so what we've got to focus on, I'll first go to the Great British Pound to see what it is doing. Now, I've got a 15-minute delay, it looks like, on this currency pair, and then we'll go look at the futures contract. But the one thing that you've got to really pay attention to, because the FXB is not traded, 24 hours a day like the currency pair, you want to watch the trading session from November 14th. And November 14th is a hammer candle out there, and that low is 1.5593. You absolutely do not want to see the Great British Pound close below that level. Because if it does, it would suggest that it wants lower price. Now, we've seen the Great British Pound is doing everything it can to hammer out this bottom. So I definitely can see why you would be long this currency pair. There was a bullish engulfing key reversal session at the November 19th level. That confirmed that hammer candle. Saw another bullish engulfing here on November 24th. Key reversal-ish bullish engulfing style candle on December the 1st out here. But it is not behaving for hammering out a bottom so well. It certainly hasn't taken off topside like that rocket that either has or is supposed to take off over towards the Cape. Now, is that a pretty cool thing or not? They're supposed to shoot a rocket off today and then and bring it down in the Pacific Ocean later on in the day and recover its rocket boosters or something like that? Have you been following that?
No.
Yeah, pretty cool. I think that's Elon Musk is trying to do that. So that's a pretty cool thing. But back to the pound out here. So with regard to the FXB, the way that you've got to trade is you've got to be paying attention to what goes in the pound. Now you can do the same thing, Don, by going over to the futures contract in the pound and just go over to the 6B. And if you've got access to that, you're still looking at the trading session from November 14th as well. And that price point is 1.5589. You don't want to see it close below that. So now back to your request to take a look at FXB out here. So with that information, what questions does that leave for you at this, what?
Well, excuse me. I guess I'm just playing a waiting game.
You are, and a patient one at that. So it's probably wearing on your patience to be playing that waiting game. I don't know why I'm not getting the data coming through on my. Now I'm at a strategic. There we go. Now it's back to the FXB. Look, I guess a couple different ways to take a look at this trade here that you're in. One, if in fact the pound is putting in a bottom out here, it's probably a pretty decent bottom. And so you probably have some really good upside potential inside of this ETF structure out here. By the way, the market profile, if this helps you at all, on the FXB is 153.54. I would say it closed below that. You're probably on the wrong side of the trade. But I really think you got to go back and use that session from, I think it was November 14th. And inside the FXB, that low is 153.22. So that's probably about where your stop is. So it's definitely got bulls that are out there defending this area. The question is, they haven't been able to do anything other than defend the area. Kind of like a battle. Between two sides. They're not aggressive. They're not being able to take any action to move higher out there. And that's the only message that it has. Doesn't mean that it's the wrong trade or a bad trade. The bigger problem really with the FXB is just the liquidity in it is so small.
Okay.
That's really the primary issue there.
How about soybeans?
Soybeans. Okay, let's go see if we can find anything on soybeans. Where do I have? I got to go see if I can find those. Tell you what, can you hold on through the break?
Yes.
All right. Then we'll go take a look at the soybeans with our man Don in beautiful Sarasota, Florida. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 68, S&P down 7, Composite off 2, Russell 2000 down 6.5 points. We're going back out to Sarasota to visit with Don. He wanted to take a look at the soybeans. So, Don, tell me what you're looking how I can help you here. Are you in a trade? Looking to get in a trade?
No, I'm in the trade. I just want to know if it's going down and how far.
Okay. So you got this to the downside. All right. When we were looking at the Great British Pound, one of the things that you and I identified was a hammer candle. The Great British Pound soybean futures created a hammer candle. So the important low for you to be watching is yesterday's low, 983.6 out there. Okay? Now, we do have a confirmed A to B equals CD to the downside because the B point was taken out with volume, the B point being the low from November 19th. So to answer your question, how far down are soybeans headed to? What we can take a look at is the A to B equals CD. You got an important low from yesterday you're going to be watching. Prices underneath the TAS market profile box. The nice thing about this, the beauty about this, Don, is that this box here actually was bullish. When I say bullish from the standpoint that the point of control where price was comfortable for both buyers and sellers was closer to the support line. And when that broke here a couple of days ago, and broke with volume, that really was telling you that the sellers are in control. Buyers did step in yesterday, creating that hammer candle, trying to create some support out here. But at this stage of the game, not seeing much in the way of follow through today, so it makes yesterday's candle somewhat suspicious. Your 1-to-1 takes you 972 and a quarter. Your 1-to-1 0.272, 949.81 as the level. If we just simply take each of those, we'll probably set up a Gartley buy pattern. That Gartley buy pattern, the 0.618 Gartley buy pattern, is right in the 978, 972-ish type range out there. So what you want to watch is if, in fact, this hammer candle fails, see what kind of bar, what kind of volume is pushing down into those areas. Because more likely than not, if that hammer candle fails, I would say you're more looking like a Gartley buy pattern, a place to maybe reverse the trade, go the other way, is right around the 949.81 level, your 0.786 retracement. That's what the patterns look like to me. The key, again, for you is going to be the low of yesterday. When that gets taken out, that should signal lower price. How much lower right now? You know, it's those areas that I gave you. What you will know when price gets down into either of those areas if there's a reversal candle. If there is, then that tells you, okay, it's time for the bulls to try to take this thing higher. That's what it looks like to me. Is there something else that you're looking at that maybe I've overlooked in just this two-minute review?
SOYB, how does that translate?
SOYB. Let's go take a look at that. So that must be the ETF for soybeans. Yeah. So, you know, interestingly enough, Don, yesterday was a hammer candle inside of this as well. The problem is really no liquidity here. You know, I mean, just give you an example here. You know, no Thanksgiving, but November 26th, you had 6,000 shares out here. You had 12,000 a couple of days ago. Yesterday, there's 34,000. So I would just, you'd be better off to trade the actual commodity than you would, this ETF. And really kind of the same thing for the currency pair, because just simply your money management is in place there. That's why you like to trade the actual underlying instrument versus the ETF. Now, yesterday, just as an example, if we had only looked at this and we didn't look at the underlying instrument, what we would say is that yesterday this completed a 1-to-1 A to B equals CD and had a hammer candle, and you've got price moving slightly higher. And if we only relied on the ETF out here, this would say we've got, looks like a confirmed Gartley buy pattern. But it's really the underlying instrument versus the message that comes off of the ETF. At least that's my opinion and what I would be paying attention to.
Okay, good.
All righty.
I appreciate your intuition and your help and all the things you do for us as a listener.
Well, thank you. We appreciate everything you do for us just simply by listening and all your support. So wish you and your family a happy holiday season if we don't talk soon, and have a happy New Year.
And likewise, same to you. Thank you.
Thanks so much. That was Don in Sarasota, and a great opportunity to take a look at some ETFs and then the underlying instruments, which is really, when you trade any ETFs out there, taking a look at what's going on in the underlying instruments is so important. When you trade the diamonds or the SPYs or the Qs, you want to see what's going on inside of the, because those are weighted ETFs, what's going on inside of each of those out there. So as we come back here and take a look at the general markets, we got the Dow moving down now. It's off 80 points. Let's go take a look at the Dow Diamonds, just to start with the Dow Diamonds and see what we have out here. Inside of the Dow Diamond, just traded 178.22. Yesterday, price got above the 1-to-1 A to B equals CD to the upside. Now, that's an A to B that began back here on February the 5th out there. That was our A point. For some reason, it disappeared. I'll put this back up on the screen for you. So our A point is February 5th. Our B point that I'm using is September 19th, and the C point down here on October the 15th. The 1-to-1 move on that takes you into the 178.47 range. Yesterday, let me just trying to widen this up a bit. Here, yesterday we actually saw inside the Dow Diamonds 11 million shares to the upside. Now, not a wide-ranging bar, but certainly had volume. Big volume, quite frankly, for it. The last time we saw any kind of volume like that was October 17th inside of the Dow Diamonds. So far today, the pullback in the first hour and 10 minutes of trading is 1.2 million shares. So you're light on the pullback, versus the high that was made yesterday. If volume accelerates for the next 5 hours, a different story out there. But what I can tell you as of 10:40 is that inside of the Dow, the volume and the pullback is light. Does that mean that the price won't go any lower? No, it doesn't mean that at all. But we're taking a look at just one criteria. Remember, we take a look at any thing that we trade, we should really go ahead and try to break everything down into what I call their, let's see if I can find it out here on my screen very easily. We really want to break things down into, what do I have up on there? I've got radio slides. I thought I would have had it in the radio slides, so I got it right here. You want to go ahead and break it down into what Stevie calls the pyramid, the trading pyramid. And if we take a look at the trading pyramid, just to give you a feel for what I actually mean there, start right here. There we go. There's our trading pyramid. Remember, volume is only one aspect, just like momentum is only one aspect. And these things are not necessarily equally weighted, meaning 25% for each. But if you just started with being 25% for each, then it would help you to identify what's really going on inside of an equity. So you've got volume, and you can use so many different indicators. You can just use the flat-out, straight-out volume. You can use on-balance volume. You can use the demand index. There's others I've got on my screen. For momentum, you can use the stochastics. You can use relative strength. You can use the Williams percentage R. I mean, you only need to use one of them. You only need to master one of them. If you spend time mastering several in one category, and when the only thing that you and I have is really time, I mean, we're each equal. Each morning we wake up, we got the equal amount of time. Every human being on the planet is equal when they wake up each morning. It just depends on what it is we're going to do with our time. Of course, I love spending my time here with you. Of course, you've got the volatility, liquidity aspect of what's going on inside of a whatever it is you trade. When Don and I were taking a look at a couple of those ETFs, the problem with the ETFs were, from a volume and liquidity standpoint, they really didn't have it. And that's why, from a money management perspective, I suggest one is better off to trade the actual underlying instrument versus the ETF in that situation. You want to make sure that you can, it's not about getting in, it's always about getting out. In the case of volatility, using Bollinger Bands is great. Standard deviations like Daryl Martin uses, that's wonderful out there. There's a number of different tools that you can use. And then you got the energy or the angle. Using the Art of the Charts Power Law Vector Indicator, probably no better tool to help you identify the energy of the angle. Basil likes to use the MACD to measure the energy and the angle. Another excellent tool out there. So what you want to make sure that you're doing, you can use moving averages. They're somewhat lagging indicators, but they all provide great information. You only need to really master one of those. There's more than what I put up here on my screen. But remember, when we take a look at things, you've got to recognize that there are, personalities of everything that are traded, and those are the four primary personalities out there. So we got the Dow, looks like towards the bottom of its session. Of course, what we know about that we looked at in the first hour of the show is we've got this great momentum or a trending tool called the McClellan Summation Index out here. And I've got the Summation Index as a part of my tool set here inside of eSignal. That tool set allows us to take a look at what's going on inside three of the key indices out here. One of those being the New York Stock Exchange. Well, that's now back below zero. This thing has been below zero, above zero, below zero. It's confused. It doesn't know what to do. There was really, I think, waiting for the Dow out here. You've got the NASDAQ Composite. She's now back below the zero line out here. It was the day before was below. Yesterday it moved above. Today you're back below. Now this is the first time. This is the first time we have synergy. That's as of 10:44. I have no idea what it's going to look like at 3:44 in the afternoon, or better yet, 4 o'clock in the afternoon. But what I can tell you is this is the first time that we have synergy amongst these three indices with the price oscillator being below zero. Why is that important? That's important because the summation index, its trending tool, then starts to turn down. How long will the trend last? I can't tell you. What is it that I believe if we're seeing a change in trend? I believe what we were going to see then is a scary retracement. Scary retracement. The kind that you want to buy. So if I prepare you for it now, while we're up at the highs, and because and you're neutral at this stage, and you're looking to buy in because you want to participate in the Santa Claus rally. What I'm here to say is, when you see that scary bottom, when it looks like all holy heck is going to break loose, then you'll know, hey, guess what? We're getting close. Stevie says we're getting close. Now, it's when you've prepared for it and those scary bottoms come in, it makes it a whole lot easier to buy because you were looking for it ahead of time versus actually being in it. The question is going to be, is it going to stop right here? Well, one thing I can tell you is that there's other tools and patterns that we have. There's tools that I teach folks. If you're not familiar with Japanese candlestick charting, you absolutely need to be. You must be, because otherwise you're looking at the stock charts and you're not taking advantage of all the messages that they provide us. We took a look at those hammer candles with Don and the Great British Pound inside of soybeans. Yesterday's low inside of soybeans is very important out here. So we now have synergy amongst these three, and we've got the ES Mini with regard to its synergy on its 2-hour chart, trading below that 2070.75. And what we know is that area acted as resistance here in this last 2-hour chart. So where does that scary low take us to? I don't know the answer to that. I really got to go. My opinion of where that is here, I guess I can't answer that. It would be foolish for me to say I can't answer. Well, it wouldn't be foolish to say I can't answer something, but I can. Let me come over here. Let me take a look at the S&P 500 specifically. Right here. Let me come to this tab. There we go. We got the diamonds. Let's put the S&P out here. It's up off 11 points as we speak right now. And what I'm going to do is I'm going to do a retracement. We're going to do a retracement from the low here on October 15th. Now, that's a hammer candle down there as well. So these hammer candles, they're just such an important candle to understand and take a look at. Now, your dead cat bounce is 1978.63. And that is one possibility. And that I don't know how scary that would be, but if you're at 2062, 1978, you're looking at 20, so you're looking at an 80-point move. That probably qualifies as the kind of scary that people are like. People will be on, I guarantee you, they'll be on the television screen, most of them. Those big down days, okay, Santa Claus rally is over. Not even close to over. Santa, this may just simply be the gift that wants to keep on giving. Now, we take a look at where is it that I really think price will probably head to. It is more likely about this green line here, maybe about 2025, but that might be it. Now, 2025, that gets us really close to that October 31st session out there. So I would say the ranges that I would be looking at, the numbers I'd be looking at, inside of the market, 2,000 and a quarter inside the S&P, 2001, the Space Odyssey out here. That happens to be the low of that October 31st. That's a breakout session. 1978. That's another area to be paying attention to. I think those are the ranges. If we are about to see a short-term change in trend, those are the ranges that would probably create a scary bottom. How far can it go? Well, let's see. Today is December 4th, right? How about today's Thursday, next Wednesday? If I was going to try to time it, sometime between now and next Wednesday, when we see price hit these levels, that's when I would say that scary bottom could actually form out there. So that's what I think is going on inside of the markets. Of course, if we see that the VIX index get above the 50-day exponential moving average, that's at 1437. You're at 1319. That's when that scary bottom can really happen, because then you start to see some real carnage. If we were to get a VIX index, and it started to move here today, if we were to see the VIX index today have a one-day rate of change in excess of 10%, that means probably about another 70 cents. So we'll trade up about $1.40. That says we got a bounce coming within 48 hours. This is Steve Rhodes at TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 87, S&P down 10 points out there. Looks like they've scrubbed that launch, that Orion launch. I got to read up more on it, but I believe this is the launch they're going to. It's coming out of Kennedy Space Center, Cape Canaveral area. So they'll shoot the rockets off from there. and then they're going to re-land it on a platform in the Pacific so that they can save the actual rockets, which will just simply be wonderful, will be amazing, will be able to save, they'll be able to save, just simply millions and millions out there. So pretty cool, but looks like, I don't know the reason why, but I'm assuming it's going to be winds or some other technical thing that's going on out there. So, with that kind of money, invested in there, they should pay attention and wait, and do it when everything is in place out there. In any event, let's take a look at a little rocket ship that's called our stock market out here and see what it is doing. So we took a look at the summation index, the VIX indices. So we don't need to belabor that anymore. If we take a look at a daily chart here for the NQ, man. If the market's going to go down, it's going to need this to really participate out here. And at this stage of the game, other than the potential seventh wave count to the upside that we got inside the NQ on its daily chart, that was back here on November the 28th, what certainly has held as support, Basel's 9-day EMA, my 8. I use 8 and 13 again because they're part of the Fibonacci summation sequence out there. And if we take a look at today's candle, certainly the low of that's been tested. No reversal candle or anything else along those lines. We've got a reversal signal here back on December the 1st out there, but otherwise this market here has not done a whole heck of a lot. In fact, inside the NQ on its daily chart out here, it doesn't start to get into any kind of bearish, significant reversal formation until about 42.16. Now, that could be kind of the scary low. 42.16, you're trading at 43.08, so you got about 90 points or so. Down to that level, but that's what's going on the daily chart there inside of the NQ. What I can say, liquidity gauge wise, if we take a look at that Euro Japanese yen, this thing is taken off topside. Right now, it has not taken out, but it's trying to take out the November 20th high, which is 149.13. You're trading at 148.79. If it does that, it just continues to move higher, but that would be a large A to B equals CD to the upside that it would be forming out here. Let me put a weekly chart up on my screen for the same currency pair. Now, ideally, we get the yen going in the northerly direction and the market's going in a southerly direction, because that's the kind of divergence that Santa, you want Santa to deliver that. Because if the euro's moving higher and our markets are moving lower here, that's going to really put the fuel. And it's the euro yen that is going to point the direction of what goes on inside the market. So that's actually what you want to see out here. And that would be between now and next Wednesday is the call that Stevie's making at this stage of the game out here. So. With about 30 seconds to go, let's see what's the best thing to look at and how to end this. Well, we got gold here is now just slightly green. It's up 90 cents. With the U.S. dollar index back about, how about that? U.S. dollar index back 578 ticks right now, trend out at 88.41. And gold, that's the weekly paces. The daily chart here is still just trying to flirt with breaking the trend. So it's got that thumb. We took a look at it. Somebody's holding it down. We got hold. Eventually, this thing is going to bust. I think it's going to bust to the upside. Folks, stay tuned. Our man Basil Chapman, he'll be up next. Have a great Thursday. Look forward to seeing you soon. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.